Hi, everyone. This is Kevin Kaplan, COO of Long Realty, and I'm here to just give you a brief update of what's happening in the housing market through August here in Tucson. So let's dig in. So the first chart I'm starting with is what went under contract. Basically, this means what listings had got an accepted purchase offer and opened escrow. And what you're seeing on this chart is the blue line is last year, the orange line is this year. That dotted black line is a 5-year average from 2015 to 2019, so pre-pandemic. So it kind of gives us an idea of how do we compare to a 5-year period of a good market before the pandemic and also shows a seasonality. What we see here is through July, um, the number of under contracts per month has very, very closely matched what happened to date through last year. August, we actually see that orange line tick up a little bit, which is a good sign. We saw a little bit more under contract than we did last August, and hopefully that helps translate into closings in September and October. And we're still a little bit below that 5-year average line. Now, if we break this down a little further and actually look in the Tucson area by price range, it kind of gives us one level down to see what's happening at different prices. So up to 499,999, we actually have seen a 4% increase year to date in the number of listings going under contract compared to last year to date. The 500 to 750 is actually down 4%. And you're going to see through a number of these slides when we break this down by price range, that's the segment of the market that's underperforming the others. 750 to about a million is up 4%. The million to 2 million is actually up 14%, so very strong. And 2 million and up is actually up 19% year over year. So that higher end, the million plus, 2 million plus market, it still has a lot of wind in its sail and a lot of strength. When we go to close residential sales in Tucson, very similar to under contract, we've seen a very close correlation what's happened this year to last year, that blue and orange line. We're virtually matching about where we were last year and still riding under the 5-year average curve, but we're following normal seasonality. When we break that down into price points, you can see the 500 and under, we're actually up 1% in closed sales over last year. 500 to 750 is down 3%. 750 to a million is down 1%. But again, look at the luxury market. A million to 2 million is up 8% in closed sales, and 2 million and up is up 18%. So that higher end of the market where folks have better financial footing and less of those deals are financed, they're less subject to mortgage rates. We're seeing very strong influx of activity in the higher end. In terms of listing inventory on the supply side of the equation, blue line is last year. As of August, you can see for the first couple through May, we were actually increasing inventory. Historically, if you look at that dotted line, we tend to start the year and then work off inventory throughout the year, and then it goes up a little bit in October, November. We've actually our inventory's been coming down since May, June, July, and August. It's come down and moderated a bit. So we're probably about 4,400, 4,400 listings. So if that trend continues over the next month or two, we're probably going to be right at where we were last year and right at a 5-year average. So we don't have this big glut of inventory. We have a little more than we had last year, a little more than historically normal, but it's kind of moderating down. If we break that down by price point, at all price points, inventory is up. You can see up to 500 and up to 750 is up. The 750 to a million is only up 7. Million to 2 million is up 29, and then you get over 2 million and you're up 32. So that's that. New listings. So how many new listings each month are coming on the market? You can see we started the year, the first 4 months, trending higher than the year prior, than 2024. And that trending higher put us about at our normal 5-year average. So that was very normal. The last few months, you can see that's moderated down, and we're actually tracking very, very close from May through August to where we were last year. Okay. A little bit below that 5-year trend line. Days on market. So this is how long on average does it take a new listing to go under contract? What's that time period? You can see for the first 5 months of the year, we are tracking higher than last year, but at a very normal 5-year average clip. The last couple of months, that has ticked up a little bit. In August, it was actually about 61 days on market, so about 2 months. So that's trended a little bit higher. So that's just something to be aware of. If you break that down by price point, where does that shake out? The blue is last year, the orange is this year, in terms of August. So for up to 500,000, we're at about 63 days in that up to 500,000 mark. Last year, this time in August, we were at 49. The 500 to 750 is really close to where it was at the same time last year, 58 to 55. 750 to a million, we're at 48. Last year, 29. The million to 2 million is at 44. What's interesting to me is the shortest days on market price range is 1 million to 2 million, not under 500,000, not 500 to 750. It's only 44 days. So if you look at all these price ranges, that's actually the lowest one, which shows how strong that 1 million to 2 million market is. The 2 million and up, I think there's just a function in the month of August of what sold and how long it took to get under contract, because it says 140, but I think that's a little bit of an anomaly and nothing of concern. We saw how strong the sales were in that 2 million and up category. This is months of inventory, and basically this tracks the relationship of supply and demand, and it's how long would it take to sell out the inventory that's out there at the current sales rate. The benchmark on this is that kind of green shaded area that you're seeing on your screen. About 4.5 to 6.5 months is what we considered a balanced market, where that supply demand is kind of even. Nobody has a big edge over each other, and it's kind of neutral territory. You can see where we're tracking that orange line. We're about 3.9 months of inventory as of August, which is a little higher than last year, but you can see it's still just short of that green section. So we're kind of flirting a little bit with some of the conditions of a balanced market, where we see a little more even playing field between buyers and sellers, but we're not even quite there yet. So a little bit more room for buyers to choice and a little bit of room to negotiate. But it's still a pretty robust market from that standpoint. Pricing, what's happened with pricing? So if we look at median home sale pricing, and this is the last 3 years tracked, you can see the lines are in a really tight little band. 2023 is green, 2024 is blue. You can see there, for the last half of last year, those two were almost the same. First half of this year, the orange line, we're right in there. August was down this year just a hair, but it's been in that 355 to 365 range. So pricing has been very, very stable over the last 3 years, which is good because we're not seeing a big dip. On the flip side, it may present a window of opportunity because they're not accelerating up right now. And if we get a little relief on mortgage rates, which is starting to happen, we're seeing them starting to come down a little bit. And if pricing is kind of stable and flat at the moment, can create a little bit of an affordability window for buyers, not a big one, but to get in, because as rates hopefully come down over time and we see more buyers enter the market because there's pent up demand, hopefully folks can use this opportunity to get in and then build some future equity. So something to be aware of. So what does all this mean? I alluded to some of this, but for buyers with a little more inventory than last year, there's a little more choice. They have a little bit more leverage during the pandemic. Buyers, were scrambling to find anything, writing offers, sight unseen, waiving inspections and appraisals, and just stuff that they were putting themselves at risk because they were just so worried about missing out on a house. Well, that's not the case anymore. Buyers can ask for things, and there can be back and forth between buyers and sellers to put a deal together. And I mentioned this window of stable pricing currently before future appreciation. For sellers, the days of putting your home on the market, selling it in 3 days above list price are mostly gone. If you have a home that's well kept and marketable and it's priced to the market, they will sell. But there's more competition from other listings and other sellers, so you have to be pretty competitive. And the pricing piece is really important, and this is why you need a really good long realty agent, because you really have to look at what's happening now in the market, not 6 or 12 months ago, in terms of what's on the market, what's going under contract or not, what's the competition, what's the condition of the other listings. And you sellers need to be a little more open to negotiate with buyers. It's a little more of an even playing field than it was. So there's some back and forth to work through. So there's opportunity still in the market. If we do see some relief on rates coming, then we may see an uptick in buyer activity in the short to midterm, but we'll see what that means. So if you need more information, want market reports on your area, please reach out to your Long Realty agent. That's the best resource. But you can also go to longrealty.com, where we have a lot of this information posted. And also we have in our blog a trending section where we're posting regular pieces of information about the market, and you can check those out. Thanks, everyone.